Take a moment, look at the disclaimer. This content is for educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any security at any time. We're here just to tell you how BTA look at the market, how we analyze the market. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we will. We are going to make money in the middle. Okay. This is going to be our weekly walk with the market because we want to stay in step with the market. We want to stay in tune with the market. We don't want to go before it. We definitely don't want to be too far behind it. We want to stay in step because if you're too far behind, you miss the move. By the time you hear about this stuff on the news, it's too late. You're behind it. You don't want to go before it because you want to get a market a chance to prove itself. So we want to try to stay in step. Stay in step with the market. Okay, this is our major market index. The major market index itself, comparison workspace. We're going to start out with the Dow Jones Industrial Average, the actual index itself. This is a daily chart of the Dow Jones Industrial Average. Okay, look at it. We got this upward trending trend line going all the way back to the March 2020 lows. You see this real big, thick red line right here? This real big, thick red line right here? That was the March 2020 highs. We came right down to it on the DIA. The Dow Jones Industrial Average hit those highs. This big, thick red line right here held the support. And we bounced. We traded back up. Okay, we traded back up to this 30,504 level and this next overhead resistance level, which is 30,635 level. We got above it on Thursday. On Friday, we gapped. Okay, and we gapped up and then we ran up the remainder of Friday and we got above this trend line, this upward trending trend line, going back from the March 2020 lows. So we gapped above it and ran above it. And then we got above the second resistance, overhead resistance level at 31,255. Okay, 31,255. And that's where we at now, 31,500. Okay, so we broke on the Dow Jones Industrial Average itself. We broke some very key overhead resistance level and trend lines. All right. Remember the double bottom formation. This is our first low, and then we had the second low to form the double bottom. Well, we got above the overhead resistance from the second bottom, right? And then on Friday, we broke above the overhead resistance from the first bottom right here. We broke above that, and we got above this internal trend line. Okay, going across the March, going all the way back from the March 2020 lows. So now let's see if we can trade up to the 32,000 level, which is overhead resistance here. The last time we got above that, we had a follow through day. We traded up for a couple of more days and then we ran into sideways consolidation. So let's see if we can get some power to go through that and then get back above that 32,000 level again. Okay, we already got the follow through day this time. So let's see if we could just go ahead and trade on through it. You know what I'm saying? So now let's look at the QQQs. Nope. I'm sorry. This is the SPY. Okay. This is the SPY, the actual index itself. The actual index itself. This is the SPY, the Standard & Poor's 500. Let me say that over. I'm sorry. I haven't had much sleep, y'all, in the last 4 days. Haven't had much sleep. So please forgive me. We are looking at a daily chart of the Standard & Poor's 500, the actual index itself. Please forgive me. I'm working on very little sleep the last couple of days, y'all. I've been focused on this thing. Getting about 2, maybe 3 hours a day. All right? So please forgive me if I misspeak every now and then. I am tired. tired. I'm sleepy right now. Okay? Right now I'm sleepy. So look, here is the Standard & Poor 500, the actual index itself. Remember the double bottom we had? Yes. I know you do. Well, look, this overhead resistance right here was the second bottom of the double bottom for the Standard & Poor. It was right around 3,810. Well, Thursday and for 2 days, 3 days last week, we tested it. On Friday, we gapped above it, opened up above it, traded above it, and then we got above this internal trend line here going all the way back to the March 2020 lows. We got above the first one. Okay, and we got above the first bottom, which was right here. Let me put a horizontal line across this bottom right here and turn it red. Okay, we got above the first bottom of the first fractal, the low of the double bottom right here. Okay, so we got above the second one, and we gapped above the second one, and we traded above the first one of the double bottom, the first low of the double bottom. Okay, well, right now we at this other internal trend line. We coming up upon this other internal trend line going all the way back to March 2020 lows. Right now we at 3,911 to be exact. So we need to see if the Standard & Poor 500 can trade up to this trend line, break above it, go up to this next horizontal overhead resistance level at 33,983. If we break above that, maybe we could go back to this 4,100 level where we consolidated the last time. Let's see if we can do that. Okay, let's see if we can get there. Can we make it there? Well, we're going to analyze the chart day in, day in, day in, and day out. All day, every day, at least at the end of the day. So we know that last hour is the power hour. We already know that last hour at the end of the trading day is the power hour. You got to look out for that. Okay? How do you close? It's not how you finish. Are you a closer? That's what we're looking for. All right. So we see the levels on the Standard & Poor 500. Okay? We see what we got to do on the Standard & Poor 500. Now, let's look at the Nasdaq. Woo! The Nasdaq got busy last week, didn't it? Last 2 days of the week last week, Thursday and Friday, bang, bang. Okay, but let's take a look at the chart of the Nasdaq and see what's up. Well, you see, we got that double bottom once again. Right? That double bottom, the first low, the second low. Well, we traded up to the overhead resistance right here. Okay, the overhead resistance right here of the second bottom. We traded right up to that, and we got above this internal trend lines right here. You see these internal trend lines going back way back to the March 2020 lows. Okay, we got above that, and we traded above it on Thursday, and then on Friday we gapped above everything and it ran up. Right? Well, the last time we got up in these areas, we started testing the middle of the double bottom, and we could not seem to get any push through it, and we started consolidating sideways, and then we collapsed. So what I'm looking for right here on the Nasdaq right now, okay, and then this is going to be the first area of interest for the actual index itself. This is the Nasdaq composite, the actual index itself. I'm looking forward to maybe trade back up to this overhead resistance area, okay, which is the high of the double bottom, the midpoint of the double bottom, the pivot. Go back to browntrading.com, browntradingacademy.com, browntradingacademy.com. Look at your videos on chart patterns. Refresh yourself on the chart patterns. Remember, the center of the double bottom is the pivot. Well, that was right around 11,946. So we closed at 11,607. So I want to see if we could go back up to that level. Okay, and if we get there, that's the first area of interest right here, this overhead resistance at 11,946, because you see, that's where we went sideways for almost 10 days, 2, 4, 6, 8, being 10, and then we fell apart. So can we get up to there, get into this consolidation area? We know it's going to be a little turbulence in there. Okay, we might consolidate a little bit, or we might blast straight through, but more than likely we'll consolidate for a little bit, and let's see if we could get through it. But if not, if we get rejected, that's not good. Okay, so that's the QQQ. The QQQs. That's what we trade when we want to trade for or against, long or short, the NASDAQ. We trade the QQQs, the ETF that tracks the NASDAQ. More specifically, the NASDAQ 100. Okay, let's look at the moving averages. Okay, let's look at the moving averages and the volume. Okay, you know we love that volume. All right, so here is the Dow Jones Industrial Average, the actual index itself. Okay, the actual index itself. And what we got here? We got our key moving averages. We got the 5-day moving average, which is the white. We got the 9, which is the green, and we got the yellow, which is the 21-day moving average. Now, what I love about this is that we got above the 5 and the 9. Okay, the 5 crossed above the 9 right here. All right, and now we have closed today. Friday, we closed above the 21-day moving average. That's good for the Dow Jones Industrial Average. That's what we want to see. We got back above the 21-day moving average, and now we got this overhead downward trend into sideways 50-day moving average, which is the red line right above head. Okay, well, you see we had our first day rally attempt back here. We ignored day 2. We ignored day 3. And then on Friday, we caught that follow-through day. See that big old volume? The volume was higher than the previous day. And we closed up huge on Friday. Okay? We closed up huge on Friday. The Dow Jones, let me pull up my, let's pull up the sentiment page real fast. And I'll tell you exactly what the Dow Jones, we closed up huge on Friday. Okay? The Dow Jones actually closed up 2.68% on Friday. So that's more than the 1.25% that we need. So that was our follow-through day, okay? Because the volume, we had an up day, and the volume was higher than the previous day for the Dow Jones Industrial Average. So we got our follow-through day. That gives us the green light to start looking for leader stocks and leader industry groups breaking out of sound-based patterns on good volume. And if you can't find any leading stocks and leading industry groups breaking out of sound bases on good volume, then maybe you could take a position in the actual index itself, the ETF that tracks the index. In that case, it would be the DIA for the Dow Jones, the SPY, the SPY for the Standard & Poor's 500, or the QQQs for the Nasdaq. Okay, so we got our follow through there for the Dow Jones. This is a daily chart of Dow Jones. And you see we got our follow through day. And we closed above the 21-day moving average. That's wonderful. Okay, so that's what we want to see. Now, let's look at the Standard & Poor's 500. So we are above the 21-day moving average in the Dow Jones. That's great. And we're above the 5 and the 9, and the 5 is crossed above the 9. Okay, so let's look at the Dow Jones. What do we see? For the Standard & Poor's. We just looked at the Dow Jones. Now let's look at the Standard & Poor's 500, the actual index itself, right? The actual index itself. And what do we see for the Standard & Poor's? Well, we got above the 5 and the 9. We gapped above it, ran up. That's wonderful. But now we're getting right to this downward trending 21-day moving average. As the Dow Jones broke above, closed above and broke above and closed above its 21-day moving average, the yellow line. This Standard & Poor's 500 is trading right up to its 21-day moving average. We closed at 3,911. This 21-day moving average right here is 3,946. Okay, we closed at 3,911. So we right at the 21-day moving average for the Standard & Poor's 500. Okay, we right at it. All right. So now, but we did get a follow through day. This is our first day rally attempt right here. Okay, that's our first day rally attempt. We ignore day 2. We ignore day 3. We start counting from day 4 and beyond. But day 4, we didn't get the follow through day. But yeah, look, day 5, we got it. Okay, we got it on Friday. You see, it was an up day. The volume was higher than the previous day. And then the percentage change for the Standard & Poor's 500, the percentage change for the Standard & Poor's 500 was 3%. Well more than what the 1.25 that we need for the follow through day. So we got the follow through day on the Standard & Poor's 500 index also. Now we just got to see if we could get above this 21-day moving average and see if that 21-day start turning up. That's what we're looking for now. Okay. And we know we're going to probably get into this overhead consolidation area where we got rejected and failed last time. Can we get above the downward trend of 50, get back in here and break through? Well, let's see. We got to keep an eye on it. We know it could be a problem doing it. It might not be that easy, but we're going to keep an eye on it. But we got to follow today on the Standard & Poor's 500 also. And it came in on good volume. Okay, above average volume and higher volume than the previous day. That's wonderful. Now, let's look at the Nasdaq. Something very interesting happened with the Nasdaq. Okay, this is why I told you it was so important to look at this week's walk with the market, because you see we got follow-through days all over the place. Every index had a follow-through day this week. Okay, look at this. Look at the Nasdaq itself. Now the Nasdaq had 2 follow-through days back to back. Truthfully, on our platform, the first one was unverified. Okay, was an unverified follow-through day. We'll get to that in a few minutes. Let's look at our moving averages first. Let me not skip it. All right. Well, you see, we got above. For our moving average, we got above the 5 and the 9, closed above it, and then on Friday we gapped up a little bit and we traded above and closed above this downward trending to sideways, now turning up a little bit. 21-day moving average. So the Nasdaq is above its 21-day. The 5 is already crossed above the 9. That's great. So now we're starting to come into near this area right here of overhead, that consolidation area where we got rejected before. Can we get up in there and get above that? Well, once you start getting in here, we got this downward trending 50-day moving average that might hold it. That downward trending 50-day moving average is at 11,982. We closed at 11,607. So let's see what happened. All right. We know what we got to watch now. The overhead consolidation area, okay, for the Nasdaq and the Standard & Poor's is right there. The Dow Jones got a little bit further to go before it gets to its overhead resistance, overhead consolidation area where it got rejected before. Okay. But the Standard & Poor's and the Nasdaq is right there. Okay. Let's go back to the Nasdaq now and talk about these follow-through days. As you can see, we had a first day rally attempt right here back on the 17th. We got to ignore day 2, ignore day 3, start counting on day 4, which was last week, Thursday. Well, we had an up day and the volume was higher than the previous day. So that was a follow-through day on Thursday, but we called it unverified because on MarketSmith, we did get a percentage gain that was over almost 2%, but on MarketSmith, the volume was not higher than the previous day. So remember, to get a follow-through day, you need higher volume than the previous day. Well, on the trading platform, we had everything we needed. We had the up day, and we had a percentage gain of more than 1.25%. It was almost 2%. Okay, it was more than the 1.25 that we need. So we saw that on the trading platform and on MarketSmith. We had the up day. But on the trading platform, we had higher volume than the previous day. That gave us the third check that we need. We need the price, which is to be an update. That was check 1. We needed to be more than the 1.25% gain. That was check 2. We had that on both our platform and MarketSmith. But check 3 is the volume. It has to be higher than the previous day. Well, we had that on TradeStation here on our trading platform, but on MarketSmith, it had lower volume than the previous day. So it was a discrepancy there. It was mixed. When we see that happen, we call that still a follow day, because we're going to go with the volume on our trading platform, right? Because that's what we trade off of. So we still going to call it a follow day, but it's unverified because we didn't get the same confirmation on the MarketSmith platform. But now on Friday, so that was Thursday. So we had a follow day on Thursday. And then on Friday, we come right back and had another follow day. We had an up day. And Friday, the Nasdaq closed up 3.34%. That's a real strong close. Much higher than the 1.25 we need. And look at that volume. Way higher than the previous day and way above average. Somebody was buying. That shows institutional buying. The large, big boys and girls, the big money ballers was buying. You don't get that kind of volume that high if somebody wasn't in the buy zone. They are buying. Well, somebody was buying. Something was buying. Whether it was somebody or something, the computer, the algorithms, I couldn't tell you. But you don't get this kind of volume from me, you, and the small little traders, what they call the retail traders. We don't get it like that. Those days are over. It's not a million retail traders out there running around trying to buy stocks anymore like it was when the coronavirus hit. They already blew their trading accounts up because they didn't know what the heck they were doing. They out already. Robinhood has went through the floor almost. They're done. See, you're not one of those people because you're learning how to do it the right way. The right way. So we had 2 follow-through days back-to-back for the Nasdaq. Very powerful. 2 follow-through days back-to-back. Very strong volume came in on the second one. It's verified this time on both. Well, we're coming right into this overhead consolidation area that's right overhead. We traded up to that, and inside of that is the 50-day downward trending 50-day moving average. Let's see what happens. Can we get above it? Okay. Now, let's look at the IWM, the small companies. 2,000 small companies tracking the Russell 2000 small companies, right? 2,000 small companies, Russell 2000. IWM is the ETF that tracks that. Well, you see that we got above the 5-day moving average, which is the white line. We got above the 9-day moving average, which is the green line. And we're right on the yellow 21-day moving average. Can we get above it? Hopefully we don't get rejected. But we had a follow day. We had our first day rally attempt right here on the 17th. Ignore day 2. Ignore day 3. Day 4 was Thursday. We didn't have it on Thursday. Okay. It wasn't like the Nasdaq, because you see right here, it got canceled out immediately because the volume was lower than the previous day. There's nothing to talk about. No follow through day. But on Friday, we got it. We had an up day for the IWM, for the Russell 2000. We closed up over 3%. So it was an up day, check. The percentage change was more than the 1.25% that we need for a follow through day. It was 3%, check. And the volume was higher than the previous day. Check, check, check. Check, check, check. Follow through day. We got it. Okay. So that's our green light to start buying leading stocks and leading industry groups, breaking out of sound base patterns. We got a follow through day on all of the indexes that we track, the major market indexes that we track. We got a follow through day on the Dow Jones, Standard & Poor's, the Nasdaq, and the Russell 2000. All 3. Friday was a follow through day for all 3. That's good. That's good. So let's see if it can continue, if this follow-through day is going to succeed. Now, the last 2 follow-through days that we had, they failed. One of them gave us a good pop. The other one didn't even give us a great pop. Because remember, we had the follow-through day on the last one here about, 2 weeks ago, 3 weeks ago, and we ran up and it went right into sideways consolidation. Remember, we got the double bottom. We broke above it. We had a follow-through day right in here. It ran up. It ran into a sideways consolidation and fell and went down. The one before that, we got a halfway decent little pop, and then it failed. So now let's see what's going to happen with this follow through day. Is it going to give us a tradable rally? Well, we'll have to see. if it's going to give us a tradable rally. Let's look at the guppy real quick on all three of the major market indexes, the actual indexes itself. Well, over here, we got the Dow Jones. You see the magenta line, the closing prices. It's got above all the downward trending. Now it's starting to squeeze and twist and turn up. The magenta line, the closing price, is below all of the downward trending. Now starting to squeeze and twist up. Green, faster moving averages. So for the Dow Jones over here, the guppy is telling us that we're above the faster, shorter term green moving averages. The magenta line of closing prices is above it, okay? But now we're coming into the downward trending, longer term, red moving averages. What happened the last time we got above that? We ran right into a sideways consolidation. We got caught in this turbulence of these longer term, red downward trending moving average. Red downward trending, long term moving averages, and we collapsed. Well, we're trading right back up into it now. Are we going to get through it? Or are we going to get turbulence, get inside those red downward trending moving averages and collapse again? Okay, well, here is the Standard & Poor's 500, the index itself with the guppy. Same thing. The same thing. We have now gotten above the magenta line of closing prices. It's above all of the shorter term, faster green moving averages. They're starting to squeeze and twist up. That's great. They're starting to turn up. That's what we want to see. Turn up, baby. Turn up. Okay. But here we got the downward trending red longer term moving averages. The last time we got in there, we consolidated, found some resistance, and got rejected and collapsed. So this time, are we going to get in there and break through, or is it going to collapse again? Well, we'll have to see. But now the momentum is starting to turn. The guppy is telling us the momentum is starting to turn. We're above the shorter, faster green moving averages. Now look at the IWM. The IWM is doing the same thing. The magenta line of closing prices on the, well, I'm sorry, not the IWM, y'all. I told y'all, I ain't had no sleep. Bear with me. We're in the grind mode right now, right? I ain't had no sleep the last couple of days. All right, so please forgive me. This is a daily chart of the Nasdaq composite, okay? And here's the magenta line of closing prices, and you see we got above all the shorter term green, faster moving averages. We are above it. But now we just touched the first lower level of the longer term red downward trending, longer term red moving averages. We just touched the magenta line of closing prices, just got into there. But are we going to go inside of these red moving averages again and find some turbulence and get rejected like we did over here before and totally collapse? The faster one squeezed, turned to the downside, and then they started expanding to the downside, showing us that the momentum was increasing and the magenta line stayed below the keep moving averages. Is that going to happen again, or are we going to bust through, baby, and see all these, the green and the red, start twisting and turning up, and off to the races we go. Back to the highs of the inverted yield curve. Back to those highs, like history said. It has always happened in the past. And then job losses, recession, and pop, bubble pops, market drops. Well, let's see if that happens. Well, this is part one. Okay. I see you in part two of Walking with the Market. We got to walk with the market, y'all. We got to stay in tune. You see what's happening. This is the major market indexes, okay? The indexes, all right? The indexes. The ETF tracks the indexes. So we have to stay in tune with the actual indexes. And then we drop down and start looking at the ETFs that we look at every day to actually trade these major market indexes, okay? We have to stay in step with the market. Stay in tune with the market. Walk with the market. I'll see you in part two.